Welcome back to the Alts Podcast. I'm your host, Horacio Ruiz. We bring you industry leaders and creators to give their insights on the rapidly changing and exciting world of alternative assets. Opinions expressed on this podcast by the host and podcast guests are for informational purposes only and should not be considered investment advice. Podcast hosts and guests may maintain positions in the offerings discussed in this podcast. The intro song, Fishing for Pets, is written and composed by Alan Goldshire from his latest release, Live at the Lakeview Lounge. Thanks for joining me on the podcast. Today's guest is Iris Teije. She's the co-founder of Koia, a fractional investment platform for luxury items and collectibles. Think Rally Road or Otis, and Koia is the European version. They debuted with a 2018 Rolex Submariner date and have since added offerings that include investable whiskey and wine, NFTs, and Pokemon cards. In this episode, we talk about how Koia got started, its mission, and the company's future plans. I hope you enjoy my conversation with Iris. All right, so we're excited today because we have kind of what I would consider a rally road or an Otis of the European markets. We have our co-founder, Iris, from Koia on the podcast. Thank you for being here.
Thanks for having me, Horacio.
Iris, so cool to have like a fractional platform like you guys where you really have different assets across different, kind of classes, right? You have wine and NFTs and trading cards. So I'm really, really looking forward to this discussion. So I guess I want to start from the beginning. You are a co-founder. And I'm wondering how you got into this stuff.
Yeah, sure. I mean, I can start by telling you a little bit about myself and my background and how I got started with Koia. So my name is Iris Teije, co-founder of Koia, and my background has mostly been in startups, primarily fintech. So I've built startups prior to Koia, helped build a digital bank in Hong Kong called Needs, was the first employee there, helped the founders grow that business, focused on business development, marketing, and really saw that journey of going from the start to growing the team, growing internationally, growing our user base. So that was very exciting and definitely very good learnings for setting up Koia now. Aside from that, I'm also a community host at Finimize, which is one of the world's largest finance communities focused on financial education with a focus on investment and investment education. So I've always been interested in investing. So for the past couple of years, I've been personally really interested in investing, making my own investments, doing research into investing, but also from starting up a company perspective. That was an area that I was really passionate and excited about. How can I help people do more of their money and not just let it sit in a savings account? So that was sort of my original thinking. And I started to go out, started to do research, started to talk to people. And one of the things that I realized is that there's already plenty of investment platforms out there. I would say pretty good platforms out there. You've got, of course, the robo-advisors, stock trading platforms. But still, I felt there was a lot of opportunity for new ways to invest in alternative assets, because one of the problems that I saw is that, for example, if we talk to people who don't invest, stock market for many people are abstract, complicated. So I wanted to do something that was very different and that was tying into people's interests and passions. And then also, having started the business around a year ago, obviously that was a good time in terms of people had started to become more aware of alternative assets, collectibles, but also crypto, NFTs. With the rise of all of these different asset classes, people started to realize anything can be an asset class, even though fractional was and is still very new, especially in Europe where I'm based. I would say the idea that, you can invest in things like sneakers with, obviously StockX being huge, that became a lot more popular, normalized. So that is sort of how everything came together and how I ultimately came to founding Koia. And of course, it's not just my idea. I've got two co-founders. So we've got our CTO, Ben Riazi, and our CEO, Richard Draper. And Richard's background is in finance and investments. So he's previously had a lot of exposure to these passion assets, working with family offices, high net worth individuals, seeing how they invest. and, realizing that normal everyday people don't have access to these types of assets. So it was kind of everything coming together. But yeah, that for me personally, coming at it from more of an sort of retail investment point of view, and giving people access to exciting new opportunities.
Yeah. What I picked up on there about a lot there, and I'm kind of wondering that role that you have as a community host for investments, and I'm wondering how it's received by the community when you start talking about these alternative assets, specifically the collectibles, right? Because I imagine that maybe in a forum like that, people are seeking the traditional advice, like what should I do? How should I allocate my retirement funds? How should I, what kind of stocks can I buy? And I'm wondering if you could give me some insight on how the reception is when you start talking about, passion assets, as you call them.
Yeah, oh, absolutely. I would say with Finamize, the company that I mentioned that I'm a host for, Collectibles is just a small part of what they're doing. So they host a lot of content. The majority of their content is still about equities, because of course that is where most people allocate most of their funds to. And I think that is completely fine. So it is just showing a different perspective, just showing something new, showing a way to diversify your portfolio. And I would say people are interested in that. And the other thing is, the other thing as well is that there is definitely still a lot of education to be done. So when people hear about this, they are excited, they're interested. But quite often we hear that, we're still in this very early stage. We're hearing, regularly, I didn't know that watches or whiskey or fill in the blank could go up in value. So there's still a lot of education to be done.
Yeah, definitely. I'm going to jump into Koia, because there's other questions I had for you, but I did want to jump into Koia and the assets that you have there, because it's really interesting. You guys decided to start off with offering a Rolex, and you guys are Europe based, and I'm wondering, what came behind that decision to start off with Rolex, a luxury watch, and kind of how you've been met in the European market, the UK market.
Yeah. So our asset selection has been mostly based on our community's interests, feedback from users. So when we started the business, obviously the first thing we did is collect leads, try to speak to as many people as possible, finding out what their interests are, and very much, drive our decisions from there. So very much related to community demand. And also when we're talking about, Europe versus the US, we're one of the first fractional platforms here in Europe. But so the concept of fractional, it's still pretty new. And there's, as I said earlier, quite a lot of education to be done. However, what I would say is that the concept of collecting is definitely not something that's new. And if we're looking at, for example, the luxury asset market, it's very developed in the EU, in some cases, bigger than the US, depending on which market we're looking at. And you mentioned, for example, watches, which is actually a good example, because Europe is the biggest market for pre-owned luxury watches. And if we're looking at more generally pre-owned luxury goods, there's a report last year from BCG that, mentioned Europe is around 50% of the market for that. And if we're looking at other assets, like, for example, fine wine, of course, European market, pretty developed. Most of the fine wines are still coming from France, like 40% coming from Bordeaux. So in terms of collecting luxury assets, the concept of that is something that you can invest in. I would say that is pretty well developed. But of course, the fractional element, that is something that's quite new. And that is something that we really need to create awareness around.
Yeah, the awareness is huge, and you mentioned about how in some areas Europe is probably more developed than others, and in talking to a lot of people here in the States, it seems like trading cards, right, like sports cards, were really a gateway into these other collectibles. People have been sports collectors their entire lives, and then they jump into different things like like wine and whiskey or toys, and it's almost like a natural jump, and I'm wondering, like, if there is that in Europe, like if there's that kind of that passion, right? That passion kind of collector that you would find in trading cards or in sports cards, that then makes it a little bit easier than to kind of jump into these other asset classes. What have you found with that?
I would say in Europe the interests are a little different. Trading cards aren't as big. But here, as I said, for example, watch is one of the categories we started with because of our community's interest. And that is exactly, one of those categories that people already know about, that already has a big fan base. You've got quite a lot of influencers, YouTubers talking purely about watches. So there's already a big community around that. And same goes for wine and whiskey, as well as art. I would say it's already, a lot of awareness around those asset classes. So in our case, those are the entry points towards perhaps other types of alternative assets or more niche kind of categories. Also, by the way, obviously cars is another one. Classic cars, sports cars is another one that's obviously something that is known by the mainstream and has mainstream appeal. We just didn't start with that specific category for a couple of reasons. The unit cost to get something really exciting is a little bit higher. So obviously you need to build out your user base. And then also the cost for maintenance, storage is higher. It's more complicated from a logistical point of view. But that is another one of those asset classes that you could use in theory to kind of, get people into the platform and then in the future cross-sell them into other types of assets.
Yeah, I love how you kind of talk about how, you're starting with something familiar, like watches.
Mm-hmm. Exactly.
And then you hit them up with, and then you throw other things. Like I'm just going to throw out like Moonbirds, right? The NFTs. You have one that seems like it's going to be come up for offering, or a package of Pokemon cards as well. So, and the other part of it is you do try to educate, right? You do your part. I know you guys have a lot of like kind of experts that you've interviewed, and you kind of explore, why something like this might be valuable and why people are passionate about it. So how about those other assets? What do you see kind of, how do you want to diversify your platform?
Yeah. So just to go back to your point on experts, I think that is extremely important because I would say one of the biggest challenges that we see, but I would say probably any platform in our space would see, is trust. Like, how do you build trust with potential users? Especially if someone is coming across our platform via an online ad. So it's relatively anonymous. So how do you build that relationship? How do you build that trust? So I think working with experts is really important. And those experts need to be willing to, attach their face to our company. We're doing quite a lot of YouTube, or we're starting to do more YouTube videos. And also we're working with these experts to help us source, because internally we obviously cannot be experts on every single asset class. So we really need those experts to also help us and advise us in terms of sourcing. So we've been working with an expert on the whiskey side called Mark Littler, a whiskey broker based here out of the UK. We've also just onboarded a new watch expert who's going to be working with us on the sourcing side, on the content side. So I think those things are all like really, really important. And then I forgot what the actual question was that you were asking. In terms of how we're going to diversify, going to diversify the sort of and how we're looking at asset mix. I would say there's a few criteria for us. The three sort of main ones in our eyes are demand. So what is our community interested in? Secondly, what's the investment rationale? So even if our community is interested in something, but we have really strong reason to believe that there are really big risks with this category, we might not go into it. And the last one is, of course, sourcing. Just being, realistically, some asset classes are just easier to get access to compared to other asset classes.
Yeah, you mentioned a car before, and I can imagine how difficult it might be to take care of a car. Just to
yeah. On the logistics side, of course, as well, that can be a bit of a barrier.
So I just want to say that I was watching your videos. That there was no single malt Scotch available outside of Scotland until like after the 1960s or something like that. And just within those first 5 minutes of knowing that, I'm like, wow, I had no clue about this. So just to kind of reinforce that point of like having experts, like that really does help you understand a lot about the value and the history. The history is really kind of helps to get you familiar and kind of easy with certain investments, you know?
Exactly. And also just building trust that, we know what we're talking about and we've done our research.
Yeah, for sure. Let's talk a little bit about the platform itself and kind of how you go about it. And we were having this discussion before we came on air or before we started recording. And we talked about, look, I've spoken to a lot of, CEOs or founders of their investment platforms, and they really want to go the retail route, right? And right now it's only open to their platforms are only open to accredited investors, but you've had offerings for as low as $20. And the conversation there is, they really want to open it up. They want more retail investors, but it gets hard when, maybe you have a couple people buying a share or two and that the expenses become kind of prohibitive there. You guys, have had, like I mentioned before, as low as $20, a couple for $60, $100. What are your thoughts on that?
Yeah, I mean, for us, it's really our mission to open up access to alternative assets. So if you would need $10,000 to get started, that just wouldn't fit within our mission, because we want to be able for anyone to buy a fraction linked to these iconic assets. Of course, that does come with its challenges. I would say, firstly, the one of the differences that I need to point out between Koia and some of the other platforms out there is that we are using NFTs to enable fractional ownership. So how we do it is we link NFTs to the underlying physical assets. For example, it could be 100 NFTs, it could be 200 NFTs. There's no fixed number. It depends a little bit on how expensive the underlying asset is. If we're fractionalizing $100,000 asset, we would link less NFTs than if we fractionalize a $1 million asset. And how it works is that users buy the NFT, then they can either hold onto that NFT and get to vote for future buyouts, or they can also trade the NFT on platforms like OpenSea, or in the future also Koia's own secondary markets. So now why this is relevant is because using NFTs lowers our cost structure compared to the quote unquote traditional model of putting the asset in an SPV, issuing shares in the SPV. That comes with quite a lot of additional administrative and overhead costs. So if your cost base is higher, you might not be able to sell $20 fractions. Then the other thing to point out, yes, of course, the more customers you have, the more customer support overhead you might have, because there's going to be cost involved for each customer that you onboard. The more potentially sort of marketing costs that you have. But based on we're still relatively early stage, but based on what we've been seeing so far, and based on how we've sort of modeled our future, how we've modeled our business model, our progress, we do in a trajectory, we do believe that it is viable and feasible to have a platform where we allow people to get started with small amounts, make it very accessible, as long as we keep our cost base low enough that it makes sense.
Yeah, and I found that, and if I can make like a parallel, like with Rally, for example, Rally Road here in the United States, they've built up a community, and you mentioned that before, like building up a community of investors. And what's interesting is, and I'll come out and say it, even we at Alts, we give recommendations, we give kind of our view of assets, and people will they'll read our stuff, but they'll still go out and buy a couple of shares, even though they know that the market value is lower. And I think that part of that is because Rally has done such a great job of kind of, like I said, building a community, allowing people to kind of participate in this kind of investment, right? And people really appreciate that. So I don't know if you could talk about that a little bit, like kind of like what your community is building is like, the challenges of even building a community around an investment platform. Like, how do you go about doing that?
Yeah, I mean, firstly, to point out, some of the fractional platforms have gotten a bit of criticism in terms of, the prices don't make sense. Why does this asset have this market cap if in the open market we can get it for a lot lower? We do try to be, and so far we've listed all of our assets at market value, or sometimes even below. We don't want to add a huge premium just because we're fractionalizing. but then just because I think that's really important, just to offer, a fair price to users. Because what we ideally want to do is to get more of the margin from the seller. Because if you're a seller of an expensive collectible asset, if you go to auction, the fees are pretty high. So that is where we want to, compete. In terms of building the community, it's for us, it's still a work in progress, but something that is obviously really important, because we are using NFTs. We've also started a community. We've got our typical email list where we do our newsletter. We share our, educational materials, our videos, etc. But we also have started a community on Discord, where most people who are more into the Web3 space hang out. So that's also what I really like about Discord, is that it's not just a one-way channel, whereas with email, of course, it's more, us speaking to an audience. Same with social media like Instagram, whereas Discord is really like a conversation. So I do really like the platform. I do really like it in that sense. But it's still not as mainstream as email. It's still relatively new, I guess, for people who aren't so into the Web3 space.
Yeah, I mean, for sure. Yeah, right. Discord is like the place to be for the NFT community. So like if you're looking to join an NFT project, the first thing you do is check out Twitter, and then, or first thing you do is go on their Discord and then Twitter, or whatever the case might be. So that's really good. I mean, I see that you guys are kind of taking this NFT approach. You have the NFT approach. I'm sorry, and then you also have now something with USDC. So in order to buy on your platform, and I found this interesting, you're using crypto, right? You're using USDC, which, if you can explain what that is first of all, and why you went that route.
Yeah. So USDC is a stable coin, which means that one USDC coin is it's backed to the US dollar, and it's backed by US dollar. Why we went that route? We chose USDC because it is the most trusted, most reliable stable coin. They work with very reputable banks and audit firms. So it's a very well regarded stablecoin. And even to make it easier for people who are new to crypto, perhaps haven't interacted that much with Web3 crypto, we do also have a regulated payments partner, a company called Ramp. So if users haven't used stablecoins before, that's completely fine. You can sign up on our platform, and then you can use credit card, debit card, bank transfer to exchange your regular sort of fiat currency to USDC to buy the NFT. Why we've gone for that instead of just pricing it in euro or pounds or USD directly is because actually that's, I mean, I wouldn't be against pricing it in USD or euro directly, just because people are still more familiar, of course, with fiat currencies, but there just aren't really great solutions out there yet at the moment for buying NFTs directly with credit cards. So there is that extra step of converting your fiat currency to a stable coin, then buying the NFTs with that stable coin. Potentially in the future we would change that because of course we want to keep things as simple as possible and least amount of steps as possible. But for the moment, USDC was the best option for buying any NFTs.
And at the moment, I'm thinking, you're using cryptocurrency, so cryptocurrency could be used anywhere around the world. At the moment, anybody can invest in Koia, right? International users.
Yes, we are open to international users, sort of outside of sanctioned countries. But so even though I'm personally based in London, we're seeing most of our user base at the moment coming sort of from Europe, from the UK, just because that's where our team is based. But I believe that once we start growing and once we start to get our name out and create more brand awareness, I would definitely see the US as a big market as well, just because the market for alternative assets in general is the biggest in the US at the moment. But also, I would say Asia, like I've previously worked in Hong Kong. I know the market quite well. I think that can be an extremely interesting market for us too, just because of the huge demand for luxury assets in general coming out of Asia at the moment. And, all of the auction houses are doing some of their biggest auctions now out of Hong Kong. So I think that can also be an extremely interesting market for us. So definitely, I think that is one of the other reasons, or the big reasons why we decided to fractionalize physical assets using NFTs, is that it opens up the international market for us.
Yeah, that absolutely. Where have you found? I mean, I'm curious. I'm always curious about how countries or different parts of the world are using investment platforms. Who are the main investors in Koia? Like, where are the people broadly, mostly based out of the UK, maybe another country in Europe? I'm just wondering if there's like a section that's really more rabid about this type of investment.
Yeah, so I would say we've been seeing UK, but then also France, Italy, and I think the reason why these markets. So when it comes to Europe, UK is just the most advanced market when it comes to retail investing. People are just most into retail investing in the UK compared to other markets. But then when it comes to, let's say, Italy, France, I would say there it is also very much tied into people know more about collectibles, luxury assets. So that's already quite a known concept, which is why it's easier to tap into those markets. And also, I mean, I've spoken before to, or I'm always speaking to collectibles, not fractional, but just regular sort of collectibles, luxury type marketplaces. And I'm hearing the same sort of feedback that within the European market, what are the strong markets for them? It overlaps quite a bit with what we're seeing on the strong market for Koia, so Italy, France, UK.
Gotcha. What are some of the assets that you're most excited about? I'm sure you're good. You feel good about every single thing, but is there one thing that you're really kind of proud of putting out there? Maybe there's something in the works that maybe you could give us some ideas about. Talk about that. Like, is the Pokemon? What is that you're really happy to have up?
It's interesting. So when I started this journey, I would say at that point, I was personally pretty interested in fine wines, but I think it's just a matter of knowledge and familiarity. So when I started, that was probably the asset class I knew most about. So that's why I'm like, that's why I was like, I'm interested in getting access to this. But that was just because. But then my eyes got open to all of these other asset classes, and I would say now I'd probably be more interested in other types of asset classes that I just didn't really know much or didn't know anything about, before. So in terms of, personally, what I'm interested in, I would say whiskey I'm interested in because it has shown extremely strong returns in the past 5 to 10 years. And, as we all know, it's no guarantee for future results, but don't see that many signs of slowing down. Don't see any reasons why it would slow down. So that's why I'm pretty excited about it. And also the whiskey that we've got on our platform now, it's one that is truly exclusive and collectible, only one of 300. So that I'm pretty excited about that. But I would say in the future, looking ahead, I'm also really excited about, getting into bigger assets. When I'm talking about bigger, I'm talking, of course, about bigger in terms of value. So I think that is something that is also exciting. As we grow our user base, we can get access to more and more exclusive assets. Perhaps we can do, I think we can also have quite a bit of fun. Perhaps facilitating group bidding on auctions. For instance, I mean, last year, I'm sure you've heard of. I'm sure probably most of our listeners have heard of Constitution DAO, where a large group of people, were bidding together for the U.S. Constitution. I think that garnered a lot of excitement. So I'm also really excited about these kinds of initiatives where we really tap into the community and work together towards a common goal. And again, just another point around again the NFT piece. Because of the structure, we are more flexible. We don't need pre-approval to list something, which means we can be a lot more flexible in terms of, let's do a group bidding for an auction, or let's let's grab this opportunity. We have to decide very quickly. We can do that. And I mean, Horatio, you sent me a couple of questions ahead of the chat. One of them was around, what if an asset goes down in value between the time that you buy it and the time that you list it? For us, there isn't necessarily that long of a period. It's not that we have to get 3 months sort of pre-approval or anything like that. Of course, there's always going to be some lead time because we might acquire something, and you're always going to need a bit of time to do marketing and the comms around that. But it's not going to be. It doesn't have to be a long time.
Gotcha. Yeah, that idea, that concept of getting some of your community members to bid for an item on auction, that's something that just came into my radar a week ago or so. I know that some fractional platforms have tried to do that before, but that's really cool. That's another way of kind of engaging the community and kind of like, hey, we bought this as part of Koia,
Yeah. And I mean, internally, we've, of course, had conversations around tokens because we are in the NFT space, we are in the Web3 space. So it's always a question, right? Do you sell some sort of token to your community, or do you sell it? It can be, I mean, it can be utility token, or it can be some sort of membership token. You can have members get access to things early, or you can give them certain benefits in terms of exclusive access, events, have a say in terms of what assets are going to be put on the platform. So we're not doing this yet. We if we ever do this in the future, we only want to do it if it really makes sense, and if we know that the community is really interested in it. But that would certainly be a possibility, and I think that's another way to really strengthen that relationship with your community.
Yeah, and just not just talking, just being around startups, right? Like on our end, like me being around, like say Wyatt or Stefan, it's an ever evolving, right, discussion around what the founders are doing, what you guys are looking to kind of, what opportunities are out there, and it seems like it's always not changing, but all these different ideas, and you have to be really kind of strategic about which direction you're going to be headed.
Yeah, the way I see it is that you have to be really clear on the bigger goal. So, I mean, we're saying in our case that is opening up access to alternative assets, but then how you're doing that or the specific tactics that you're using, I think you can and you have to be pretty flexible, because we're an early stage startup. Maybe a specific strategy that we thought of, maybe it just doesn't work. So you don't have a choice. You just kill it and you move on to the next thing, as long as it fits within the bigger mission.
Yeah, for sure. That's really key. What you just said is focusing on the main thing, right? Keeping the main thing. And like you said, if you're talking about opening up these investments, that really is kind of like your path forward for at the end of the day. Iris, what's the best way? Like, well, before I do that, like, what are the future plans? I know we talked a little bit about that. Koia, you guys are growing. You guys are engaging with your community. You guys are educating, right? What else? Like, what are some of your future plans? Something that maybe short term, long term. What are you looking at?
Yeah. So just to kind of tie into that point that you mentioned around education, I would say that we've got some content out there, but we can do a lot more. So when it comes to, for example, providing data, insights, there's still a lot more to be done, and we will do a lot more of that. But other than that, I think there's a couple of key things that are coming up for Koia. One of the things that we're going to be working on soon is our secondary market. So that, as I said, even today, because it's NFTs, because it's on-chain, people can trade it anyway on OpenSea or LooksRare. But we also know that is not, going to be ideal perhaps for people that are newer to the NFT space. So we also want to have a way for people to trade these NFTs and fractions easily within our platform. So that's one thing. Obviously, pretty big project. I would say a couple of other things. Looking to source really interesting, unique, ideally perhaps even some one of a kind assets, because I think that's where it becomes extremely interesting, because those are assets that, even if you are wealthy, are really hard to get access to. So that is something that I'm really excited about. we're starting to make progress there. I mean, I'm sure there's more to share soon, but I think that is something that I'm really excited about. And I would say one other point. We're also very much looking at brand partnerships. So various ways that we can work with these, for example, luxury brands. There's several paths forward there. But that is something that's also going to be, I believe, very key in differentiating ourselves, getting more awareness around our platform, as well as building that trust.
I'm just thinking I wanted to build some parallels, right, to the U.S. So like here, like the U.S. is really big on sports memorabilia, right? Like, so game used jerseys, cleats, sneakers, helmets, and then how also like the big deal you mentioned, Constitution DAO, like having a copy of the Constitution, and then I'm like thinking like, how about if you had a copy of the Magna Carta? I don't know, out there in Europe or something like that, and how wild that would be. But my question going back was, how big is that sports collectors market in Europe? I don't see any of those kind of assets on your platform right now, and I'm wondering, if you have any insight on that.
I would say there, when it comes to like baseball, for example, it's relatively small. Of course, there are also soccer cards. That is, I don't have the stats on hand, but it is something that people are interested in. But it's not necessarily. It's not really like as investment. It's not really seen as an investment as much yet. But there's, I mean, obviously there's millions of soccer fans. We've also seen some digital platforms come up. I'm sure you've heard of So Rare doing digital soccer cards, having lots of success with that. But then there are a couple of analysts that are saying that it's a really good time to get into soccer cards at the moment, because if you look at we had someone on our podcast recently who pointed out that, let's say, look at Ronaldo, for example, got more followers on social media than most of the top US, baseball, basketball stars, but his cards are still a lot cheaper compared to if we're looking at comparable sort of athletes in the US. So it could be an opportunity, but it just depends on how that market is going to evolve here in Europe.
Yeah, a lot of it, and I think a lot of investors here in soccer, they're kind of hoping that European market wakes up a little bit. Not that there's not collectors there, but that it kind of starts coming to where kind of the United States is. And some people are making that bet that Europeans will, and people all over the world really will start collecting cards in a similar fashion that they do here in the United States.
And I'm sure that would I'm sure, with platforms like ours, and even though we don't have trading cards yet, I mean, we're still early, so there's going to be lots more asset classes coming on. I'm sure that, at some point we'll be adding trading cards as well. And with more and more platforms coming up, not only Fractional, but also just in general collector cards type platforms. I'm sure that market, will grow.
Well, you got the biggest one, which is Pokemon. And I'm not saying that really is huge. Pokemon is so huge. So
and it has a very international appeal, which is, what we like about it.
Yeah, for sure. Yeah, it really does. What's the best way to connect with Koia, Iris? How can they connect with you, with the other co-founders?
Yeah, so the best way to connect with us is to check out our website. That is joinkoia.com. We've got our links to our Instagram, Twitter is there, but it's all the same, all Join Koia, and that is where you can connect with us.
Awesome. Iris, thank you so much for spending part of your time with us and learning about this new investment community. Best of luck, and I'm really looking forward to seeing what kind of assets you throw out there and how you guys kind of develop.
Cool. Thanks so much.
Have a great night.
All right. Bye-bye.
If you think about how Rally Road got started fractionalizing classic cars to where it is now, you'll realize the scope of what Koia is building. Europe is definitely a different market with different values, and I'm looking forward to see how Koia builds its platform compared to the trends in the United States. A big thanks to Iris for coming on the podcast all the way from London, and a big thanks to you as always for listening. If you enjoyed today's episode, let others know about it or leave a review or a comment. Until the next time, take care.